All right, beginner investors, ready for a deep dive. Today, it's a wild ride. Buckle up. We're heading into the world of SPACs, those stock tickers. And a company that, well, let's just say they kind of fumbled the controller on this one.
Oh, this is a good one.
Yeah, we're diving into Skillz. They're a mobile gaming platform.
Yeah.
Went public, you guessed it, via SPAC back in 2020.
Back in the day.
Promised to be like the next big thing.
The next big thing. Yeah.
Esports meets cash prizes. All from your phone. Sounded revolutionary.
Supposed to revolutionize the industry.
But things took a bit of a, let's call it downward spiral. Not quite the trajectory they were aiming for.
Yeah, what's fascinating about Skillz is just how fast, like, they went from Wall Street darling to, I'm almost like a cautionary tale, you know what I mean?
Right.
Their stock, it soared.
They did.
An all-time high of $46.30 February 2021.
Wow.
And then almost as quickly, things changed. And we're not talking about, like, leveling up in the game.
No, this isn't some epic comeback story. More like game over screen. But before we get to that dramatic downfall, let's rewind, all right? Back to 2020, the year of the SPAC. SPAC mania. SPAC boom. Right. Now, for our beginner investors out there, SPAC, it stands for
Social Purpose Acquisition Company.
Exactly. It's like a blank check company. Goes public with one goal, merging with a private company. Makes that company go public way faster than your typical IPO. So it's like,
the express lane to the stock market.
Yeah, a shortcut to the stock market. Exciting, sure, but also, as we'll see with Skillz, a bit risky.
A little bit risky. And the thing about SPACs is they often come with a ton of hype.
Oh, yeah.
Sometimes maybe not as much due diligence and Skillz. They rode that hype wave like a pro. Big pitch, reinventing mobile gaming.
And they went about it in an interesting way, right? Instead of relying on like the usual in-app purchases, or those ads that we all love.
Oh, yeah. Everybody loves those.
Yeah. They went for a platform built around competitive gaming. Cash prizes. It was a clever idea, tapping into two booming markets. We had gaming, we had gambling. They were trying to carve out this new niche.
They were. And for a while, it seemed like they were onto something. I mean, millions of users, right? Partnerships with big names. The NFL, for instance. They even hinted at plans, think about this, integrating esports into mainstream sports leagues. I mean, the future looked bright, or at least that's how it seemed.
Yeah, the optimism, it was contagious. I actually found this YouTube video, August 2021. One investor, he's raving about Skillz, calling it like a combo of two high-growth industries.
Yeah.
A sure bet, he said. Oh, how the tables have turned.
Oh, they have. And that peak stock price, $46.30 a cent. Yeah. Well, it makes the fall all the more, let's say, painful.
Yeah, imagine reaching the top level, in a game, and then, boom, you fall all the way back down to level 1. Ouch. So what happened? How did Skillz go from, like, MVP to warming the bench?
Well, that's where things take a turn. Remember all that talk about user growth, revolutionizing mobile gaming. Turns out, attracting users and keeping them around, much bigger challenge than they anticipated.
Right, like they forgot that part of the game plan. And it's not that they weren't trying.
Oh, no.
They poured money into marketing some quarters, spending even more than their entire revenue.
Talk about a Hail Mary. And that kind of spending, that's a red flag. For investors, it screams, we're struggling to get users organically, resorting to these pricey campaigns. Not exactly sustainable.
No. And their revenue, it was heavily reliant on whales, those big spenders. But let's be real, those players are rare.
Yeah, very rare.
In the vast ocean of mobile gamers.
Exactly. Relying on a tiny percentage of users to spend big. Risky strategy. Like betting everything on a single spin of the roulette wheel.
And then, plot twist. Makes you question everything you thought you knew about the game. Skillz, they had to restate their financial statements. Now, for our beginners, restatement, it means going back, correcting those old reports, because, well, there were errors or inconsistencies.
Not a confidence booster.
Not at all.
A financial restatement, that's a big deal. It raises questions about transparency, accuracy of their reporting. Investors start thinking, if they mess this up, what else is going on? Trust erodes, and fast.
Yeah, once trust is gone, it's pretty much game over.
Pretty much. By 2023, Skillz' revenue, it nosedived, dropping to $150.1 million, down from $269.7 million in 2022. Their cash reserves dwindling, had to start restructuring. Corporate speak for, we're trying not to sink.
Remember that optimistic YouTube video?
Oh, yeah.
Fast forward to today, October 2024. The picture's very different. Skillz' stock is trading around $5.47.
An 88% drop from their peak. It's like they went from leading the pack to getting, well, booted from the tournament.
So Skillz is still in the game, but they're playing on hard mode now.
Very hard mode. Welcome back. Picking up where we left off, Skillz trying to stay afloat. Their stock price, a mere fraction of what it once was.
It was a steep drop, high score to low score, and fast.
Yeah.
But we promised to dig into the financials, so let's do it. Specifically, their 2023 balance sheet. This is where, the numbers really tell the story.
They do, and one of the first things that jumps out is their cash. Took a big hit, dropping from $362 million in 2022 to $302 million the following year. And that's significant because cash is king, especially for a company trying to grow and navigate a tough market.
Like they were running low on fuel, but still foot on the gas.
And all that excessive marketing we talked about wasn't exactly helping them out financially, actually contributing to their cash burn. How quickly they're using up those reserves.
So spending money they didn't have to attract users who weren't sticking around. Not exactly a winning formula.
No, not at all. And it gets worse. Total assets also decreased in 2023 from $724 million down to $448 million. It's like everything was shrinking except for their losses.
Speaking of losses, they reported a net loss of $106.7 million in 2023. I guess technically, it's less than the $438.9 million loss from the previous year. Maybe a sliver of good news.
Well, a smaller loss is better than a bigger loss. But you have to look at it in context. They also saw a big drop in revenue, which means finding that path to profitability still a struggle. It's like trying to climb out of a hole, but you just keep slipping back down.
So Skillz' balance sheet, it's not exactly a masterpiece, but they're not alone, right? Other SPAC-backed companies have faced similar struggles.
Absolutely. We've seen a trend recent years of SPACs underperforming. Seems like that rush to go public, that shortcut we talked about, sometimes it comes at a cost. Long-term stability, sound business practices.
Like jumping ahead to the final boss without, leveling up your character first. You might look impressive for a moment, but you're probably not going to win in the end.
Great analogy, and it highlights a key point. For beginner investors especially, due diligence is crucial, especially with SPACs. Don't get blinded by the hype. Understand the company. Financials, business model, their market. Investing, it's a marathon, not a sprint.
Makes sense. So what are some things beginner investors should watch for? Red flags when evaluating a SPAC? What should they be looking for?
Well, first things first. Look at the management team. What's their track record? Do they have a history of success? Are their interests aligned with those of, the shareholders? You want a team that's in it for the long haul, not a quick buck.
Got it. And their financials, what should people pay attention to there?
Their revenue model. How do they make money? Is it sustainable? Look at growth projections. But be skeptical, always.
Yep.
Definitely pay attention to cash burn. How fast are they using up their reserves? Burning through cash faster than they can generate it. Big warning sign.
And I guess taking into account the overall market.
Absolutely. Are they in a growing market with a clear path to making a profit? Or are they up against tough competition and uncertainty? It's all about understanding the bigger picture.
Makes sense. So we've covered due diligence, red flags, but back to Skillz. They are still trying to turn things around, making changes, right?
They are. Implemented cost-cutting measures, restructuring efforts, trying to become leaner, more efficient. Think of it like hitting the reset button, coming back stronger.
But is it enough? Can they actually pull off a comeback? Because they're still facing some pretty strong headwinds.
Definitely an uphill battle. Those challenges with acquiring users, keeping them, still there. And competition. Mobile gaming is fierce. It's like they're trying to level up while getting constantly attacked.
So what's the most likely scenario for Skillz? Do they have a shot at, a second life?
Best case scenario, they turn things around, achieve profitability, regain investor confidence. They become leaner, agile, diverse portfolio that appeals to, a wider range of players, unlocking a new power-up and overcoming the challenges.
That would be quite a comeback story. But is there a chance they just kind of fade away, become another one of those SPAC cautionary tales?
Definitely a possibility. If they can't solve those core issues, user acquisition, retention, finding that sustainable path to profit, they could end up just another forgotten app, lost in the App Store.
And then there's, the middle ground, maybe not achieving their former glory, but finding a niche.
Exactly. Maybe they become a smaller, more specialized company, focusing on a specific genre or audience. Might not be the blockbuster success they once imagined, but it could be a sustainable path.
So Skillz' future, still very much uncertain. But regardless of what happens, it's a valuable lesson for anyone interested in investing, startups, and tech.
It's a reminder that even those companies that look like sure winners can face unexpected challenges, and being able to adapt, innovate, and learn from mistakes. crucial for survival.
All right, final round of our skills deep dive. Tension's high, stakes are even higher. Can they pull off the ultimate comeback? That's the question.
They're not giving up just yet. Making moves, adapting. Mobile gaming world never sits still. It's like they've, tossed out the old playbook, got a brand new one, hoping to change the game.
Yeah, interesting to see how they're trying to shift things.
Cost cutting. That's been a major focus. Tough decisions, layoffs, reducing that marketing spend we talked about. Had to tighten the belt.
So realizing that just throwing money at the problem doesn't always work. Got to step back, reassess, find a sustainable way forward.
Exactly. And it's not just about cutting. They're diversifying those game offerings, moving beyond the whole competitive gaming with cash prizes. Maybe, realizing not everyone wants to be a pro gamer with money on the line. Some people just want to have fun.
Right. Adding new levels, new challenges, appealing to a wider range of players. The mobile gaming market's huge, diverse. Catering to those different tastes, that could be key.
Couldn't agree more. And it goes beyond just the games themselves. They're improving the user experience, making the platform more engaging, more rewarding. Think of it as like polishing up their game, adding those new features, power-ups to keep people coming back.
They're even experimenting with new tech, blockchain, NFTs, like they're, unlocking a whole secret world within the game, hoping to find some kind of advantage.
Pulling out all the stops, trying to prove they belong in the game. Will it be enough? Who knows? But the effort, that speaks volumes. Business world's constantly evolving. Companies that can adapt, innovate, learn from mistakes, those are the ones with a fighting chance.
So they've leveled up their strategy, realizing it takes more than just brute force to win, using those experience points, trying to outsmart the competition. What's next for Skillz? Any chance they can make it back to the top?
Best case scenario, they turn things around. Profits, investor confidence, a diverse portfolio of games appealing to a wider audience. Like, they slayed the final boss, unlocked the ultimate reward.
A true comeback story. But there's the other side of the coin. What if they just disappear?
That's always a possibility. If they can't solve those core issues, acquiring users, keeping them, finding a way to make money sustainably, could end up just another forgotten app, lost in the sea of the App Store.
Skillz, they're at a crossroads. The path they choose, that's going to determine their fate. But whatever happens, it's a lesson for all of us. Investors, startups, anyone in the tech world.
Absolutely. Companies, even those that look like guaranteed winners, they can stumble, they can fall. Adaptability, innovation, learning from those missteps, that's what it takes to survive.
So our Skillz deep dive, it comes to an end. Meteoric rise, dramatic fall, and their ongoing fight to make a comeback. We've also learned a lot about SPACs, mobile gaming, and just how important it is to really do your research before you invest.
Great points. Hopefully you've all gained some knowledge, maybe a deeper understanding of the complexities, the challenges companies like Skillz face. This digital world, it's always changing.
It is. And remember, business, it's dynamic. Companies rise, they fall, markets shift, new opportunities pop up all the time. Gotta stay informed, stay curious, and never stop learning.
Well said.
Until next time, keep exploring, keep asking those questions, and keep diving deep.